Mr. Mehmet Şimşek, the Minister of Treasury and Finance, Turkey.
Also, of course, GCC countries have excellent infrastructure. So as you can see, we do complement each other. So how can we take advantage of this? Well, first of all, we have excellent political relations. Yesterday, I attended a meeting where President Erdogan was president. I did tell him that I was going to be in Istanbul to address this summit. And of course, I'd like to pass on his warm regards to all of you. But we have excellent political relations. So how can we leverage this? Connectivity, complementarities. How can we leverage these to do more together that is mutually beneficial in terms of trade, investments? Well, first of all, I tend to believe that the wholesale solution is to have free trade agreements. People tend to be afraid when there is liberalization of trade because it can create dislocations. But the reality is it creates more wealth, prosperity for most, and the dislocations can be addressed through public policy measures. So I think free trade agreements would certainly help boost trade and investment between Turkey and Arab world. That you are here, that there is such a summit, that we have this strong dialogue. And connectivity. And of course, linkages through Arab banks in Turkey and Turkish banks in Arab world. That's why all of these are, dots that connect us. Now, when we look at global backdrop, global growth has been resilient. It is slow, but it's been resilient. This is encouraging. The good news is, in 2024, we expect a recovery in our key trading partners. Global disinflation is well underway. There's discussions about how difficult it is when it comes to the last mile of disinflation, but it's happening. And that means easier financial conditions in coming months and quarters. Global commodity prices in real terms are expected to be relatively stable, considering relatively, as I said, stable global growth backdrop. There is a changing global landscape. Geostrategic competition between the United States and China is creating, obviously, fragmentation. There are tensions, there are conflicts. And we think in this changing global landscape, Turkey's geographic location, but also connections are going to enhance its value. Is the program working? That's the main components of the program. The program is working. The program is meant to work this way: a combination of sound policies and structural reforms offers a great narrative. And on that narrative, we hope to regain investor confidence, which is happening, and that leads to portfolio preferences in favor of Turkish assets, leading to real exchange rate stabilization or some appreciation, and that fosters strong disinflation. And at the heart of it is rebalancing growth, improving composition of growth, making it sustainable, more balanced growth. As you can see, the market has noticed Turkey's CDS, which is the risk premium, has fallen by 439 basis points over the last year, while decline in emerging market risk premium is only 53 basis points. So as you can see, there's been a dramatic improvement in risk perception of Turkey. Similarly, if you look at the spreads, the red one is Turkey, and the blue one is MB Plus, Emerging Market Universe. As you can see, we have decoupled in a positive way. We are overperforming. So Turkish spreads are narrowing much faster than the emerging market universe. Well, structurally, this is a big market. When we say it's a big market, Turkey is as big as 15 to 17 EU member states when it comes to population, working age population, GDP on PPP or GDP even at the current exchange rates. So as you can see, whether you look at various indicators, Turkey is as big as over a dozen EU member states. It's a big economy. Last year, it was over $1.1 trillion at current exchange rates, but also it was $3.7 trillion on a PPP basis. Okay, it's a big economy, but is it growing? Yes, it's growing. The dotted line reflects Turkey's 21-year journey in real terms. So this is GDP in constant prices, in real terms. If you take 2002 as your base year, just to take a 20-plus year perspective, as you can see, emerging markets, excluding China, India, is the yellow line, and Turkey is the red dotted line. There's a strong overperformance. Of course, China, India are continental-sized economies. We have a good infrastructure. That's what World Bank says. Maybe not as good as, of course, GCC countries. We've invested very heavily in infrastructure. This is a 20-year journey in dual carriage highways and motorways in Turkey. Turkey is a big country, and we've really invested very heavily. We invested about $280 billion over the past 2 decades. That's why the need for investing road infrastructure has diminished for the next 30 years. There's not going to be much investments because of association agreement, because of EU candidacy. It's a rule-based. We are friend with North Africa. We are near North Africa. We are friend with Central Asia. As you can see, when you take our neighborhood, we are friend and we are near. So we benefit from nearshoring and friendshoring. So that's another reason why you should be invested in Turkey, neighborhood of Istanbul. Thank you and all the best for the conference.